Do you ever feel like you're really not getting ahead financially? Some people seem to be doing just fine, and others seem to be not doing fine. It seems to be either a 0 or a 1. Things are great or things aren't great. Well, in those sort of situations, personally, I think it's very important to take a look at those that are doing things, let's say, right, or seem to be successful, and try to mimic and figure out what they're doing. So I've been doing this on Fridays ever since February of 2024, with the basic premise that the dollar, a dollar bill, US dollars, decreases in value over time. That is a fact. If you look at this chart here, it shows the purchasing power of the US dollar from 1900 to 2020. But the point is, if you had $100 back then, it just went down in value. If you've seen my shows before, I've shown things like gold and alternatives to dollars that have gone up in value. And we're going to talk about all the various types of investments or things that you can own instead of dollars. The bottom line is this. If you look at some of the statistics and the articles on the wealthiest individuals, or even those that are just doing well, they typically own assets as opposed to dollars. Basic idea is this. You can have $1,000 in the bank, or maybe you put it into something like a Fidelity or a Schwab or a T. Rowe Price, and you take the $1,000 and you buy $1,000 of a stock. That's an example of an asset. So you no longer have $1,000. They're gone. You now have $1,000 worth of shares that you bought. Maybe you bought 100 shares for $10 each in a particular company. So you have shares now. So that's what we're going to talk about. Converting those dollars which go down in value because of what? Because of inflation. And what are the obvious things you can put it into? Some broad categories in the easiest, quickest way to do it. It's not as complicated as you may think. Let's dig in. This is what I show every time. You can see here, we start with savings and money market and treasuries. So, and these are the things that are closest to dollars. And essentially you're putting dollars in the bank, or you're buying a CD, or you're buying a treasury from the government. What kind of a rate of return would you earn on that? Well, in savings, you can see from 2024 is around 0.46. It's 0.41. That is nothing. That's an average national deposit rate. Looking at a 3-month CD, I always do apples to apples. So 3-month CD is 1.69. Now it's 1.42. That was a year ago. A year ago was 5.42 for a 3-month treasury. Now it's 4.32. We look at these because we say, basically, this is like holding dollars. What would you get a rate of return? And then we compare that to inflation, because if inflation is higher than the amount of return you're getting, your dollars are just losing value as they sit there. So what are some of the broad alternatives that people talk about? Let's look at these 4. I use this particular site because they bring it up in real time. We're going to look at gold and silver, considered commodities. So you can go buy a gold bar, but you can also just very simply go into like a Fidelity or a Schwab and buy an ETF, spot ETF that holds gold. I'll have a link in the description below, which has a list of ETFs that you can easily purchase for gold, silver, Bitcoin, and Ethereum for the top commodities, both commodities like gold and silver and crypto like Bitcoin and Ethereum. Let's look at last year. In February, when I started, gold was $2,050 an ounce. Now it's $3,300. It went up $1,300 on 2,000. It's like 75% gain. Well, your $100 didn't go to 175 in the bank. It went to like 102 in the bank. Silver, it was at 22.88. It's at 33.24. It's like a 50% gain. So those that were holding gold and silver are doing much better off than those who are just holding dollars. Now, crypto, I've got a show on it. I actually have a channel on it. There'll be a link down below if you're interested in learning about it. 2 of the largest, or the largest you always hear about, is Bitcoin. A year ago, it was at 43,000. Now it's at 95,000. That's more than double. Ethereum has gone down. Last year was 22.99. Now it's 1,800. They don't always go up. They go up, they go down. Dollar cost averaging is very important. If you've heard that term before, essentially just means that you buy a little bit every month. So maybe you're buying $100 worth of a gold ETF every single month, or $100 worth of a silver ETF, whatever that may be, and you're getting those prices. But over a long period of time, all of these things have been shown to go up and to the right. Crypto is fairly new. However, gold and silver, a long history of price. Then let's look at the Dow Jones and the S&P 500. I'm making this show on April 25th, 2025. Lately, Dow Jones has been going up and down and a lot of downs. But if we look over the course of the last year, the Dow Jones Industrial Average, which is essentially 30 of the New York Stock Exchange stocks, they're weighted, and they've been following this for a long time. But over the last year, it's still up 5%. Not terrible, even though we've had some recent downs. S&P 500, which is always talked about as the easiest set it and forget it, meaning you put your money in an S&P 500 index fund and you just let it sit, because over a long period of time, it seems to outperform almost everything, particularly money managers. Over the last year, it's still up 10%. So everything we looked at has been up, other than that one Ethereum. In other words, you would have earned way more money having taken some of your dollars and spread it among these various commodities than having it just sit in the bank, because that's what the rich do. Now, let's look at inflation. This is interesting. I'm going to show you two different sites. This one, I believe it has the Bureau of Labor Statistics. Over the last year, you can see it was 3%, 3.5, down to 2.4. Now it's 2.4 for March. But here's the kicker. During that time when we had that sickness, you can see that inflation had gone as high as 9%. Now, in some areas, we know that things more than doubled, like 100% and more. Eggs, gas, things like that. But they have a whole basket of goods. Regardless, if in the past things were around 2%, like 1% to 2%, I think they like to keep it under 2%. If you look here, it has gone up so high. This, which is way above average, has not gone away. Prices have not come down. And over here, they're still above average. So we've been above average since, I think, 2021. That means it's eating away at the value of your dollars. In order for all of this price increase to go away, this would have to go way down to like 0 or below for a period of time. So you can see that inflation is just eating those dollars away, unless you had things like commodities. Now, the other thing is, now this is a different website called Trueflation. US inflation about 1.42. It's showing it much lower than the other one. They use different methods of figuring that out. You'll hear both of them referenced. Next is unemployment, because that can affect things. It's at 4.2. About a year ago, it was around 3.9. Doesn't sound like a big difference, but it's a significant amount of jobs being lost over that period of time. Then we look at the last two things, the 2-year Treasury and the 10-year Treasury. Now, the 2-year Treasuries, you can see over time, the fluctuations. 3.78, that means you can put your money into a government treasury, lock it for 2 years worth of time. You can buy them and sell them, but you'll get 3.8%. It's important for two reasons to look at the 10-year, and you can see it's been going down and slightly up recently, 4.2, which is higher than the 2-year. That's the way it should be. If money is locked up for a longer period of time, that's good. There was a while where it was inverted. The other reason we look at it, we want to see this higher than the 2-year. That's good for forward-looking economic reasons. And also, the 10-year most closely mimics 30-year mortgage rates. It's a bigger correlation to the 10-year than pretty much anything else. So it gives you an idea of where mortgage rates might be going up or down if this is going up or down. So take a look at this chart, because you can see here, even these haven't changed much over time. But notice, inflation, yeah, still a problem, meaning your dollars are getting eaten, yet there's all these different ways and all these different commodities that you could potentially switch it into. So in the description down below, there's a link to a web page which lists out a bunch of ETFs. If you're not familiar with an ETF, it's like buying a share of stock. The nice thing about it is if you had to purchase, let's say, gold, you might go to Costco, buy a gold bar. Well, when you want to turn it back into cash, you got to go find a place to sell it. And they're going to charge you fees, and you're not going to get what's called spot, the actual price, because of the fees and whatnot. So you may not get as much back even if gold is up. Usually it has to go up pretty significantly before you get it back, what you put in or more. However, with an ETF, you can just log into one of your, like a Fidelity account, and buy and sell the shares of that ETF instantly and turn it into cash. I hope this was helpful. I have many videos on how to help get you out of debt. What I do on Fridays is try to explain what the wealthy do and how they grow their wealth. Not holding dollars, holding assets. Have a great day. Hope this was helpful.